Um, Good afternoon, everybody. Thank you kindly for joining us today with Master Builders ACT in regards to our Building Better webinar series. Today's session is going to be delivered by Tim Burke, who's a consultant that's been working with Master Builders ACT on a new set of legislation that's just been coming into law. And as it says on the opening screen there, understanding new anti-money laundering laws. These are changes which have moved out from just the normal clubs and pubs type arrangements, and it's going to affect everybody. So Tim's come along for ourselves to present on this idea and to tell us what our obligation and responsibilities are. Tim, all yours. Thank you very kindly.
Thanks for having me today, Scott. Fantastic to be here. Just with a bit of background on myself, I'm a born and bred Canberran, been here for a long time, and I have spent most of my career working in banks and government departments with a large focus on fraud and financial crime. It's also a really good pleasure to be here talking to your members. I actually had the privilege of starting my career in the property finance team of St George Bank some 25 plus years ago, and it's great to see so many of your members going from strength to strength in the Canberra market. So thanks for having me today, and it's great to collaborate and talk to your members about the upcoming regulatory changes. So if we just kick off to the first slide, it's good. I want to start with giving everyone a bit of an update on why we're here and what's actually happening. So Australia participates broadly in the international community, as we all know, and part of what we do as a country is involved in international efforts to prevent and stop organised crime and criminal activities from occurring across the globe. Australia has anti-money laundering legislation in place and has since about 2006. And as we mentioned before, banks and financial institutions and pubs and clubs and a range of other reporting entities have been complying with the Anti-Money Laundering Act from about 2009, so about 16 or so years. Australia is one of 5 countries remaining. I've got it up there on the slide, those 5 countries. And I'm sure you can see they're usually not the 5 countries that Australia is seeing itself as peers in the OECD. Australia is one of 5 countries that hasn't expanded its anti-money laundering laws to other entities called gatekeepers in our industry. So gatekeepers are referred to as typically law firms, accounting firms, real estate agents, and property developers. And they are part of the global anti-money laundering regime in every other country. And so Australia, or in many other countries, and Australia is now moving to become consistent with its typical trading partners and allies across the globe so that we can combat organised crime and prevent our domestic market from being exploited by criminal activities. So this is legislation that's coming in to align us to our peers. It's here to make us equal on the global stage and really to protect our staff, our customers, and our businesses from being exploited by serious and organised crime. There's often a lot of discussion around why it's coming in now. Australia is late, really, when it comes to doing this. There have been discussions over the last number of years about delays or continued delays, and the main thing that I think the industry needs to understand is the international body called the Financial Action Task Force is coming in to do a mutual evaluation on Australia in 2026. So if we do not put this in place now, we're already at the 11th hour, and that would cause significant national problems for existing reporting entities like banks and financial institutions and the industry as a whole. So that's where we're at now, or the context and background. From a timeline perspective, the legislation is already in for this. It's been in for some time. It was passed in December of 2024. It was one of many pieces of legislation that went through on I think the last day of Parliament in 2024, where the government and the Greens passed a range of packages. The guidance and the rules were published in August last year, so the industry's had a good 8 or so months to coming up to the implementation of the legislation, which occurs on the 31st of March this year. So we're some 5 or 6 weeks or so out from that, and from a tranche 2 entity perspective, the 31st of March really commences the registration date for which those law firms, accounting firms, real estate agents and property developers can start registering as reporting entities with AUSTRAC. The actual implementation of the law is required, or compliance is required with the law on the 1st of July 2026 or 30 June, depending on how you want to split hairs. So we have a number of weeks before registration opens, and we have a number of months before you must have the controls in place to comply with the Act. And we'll go through some of the timeline of that a bit later as well. When it comes to anti-money laundering obligations, the first question you have to really ask is, do you provide a designated service? I've got up here the black and white table from the legislation when it relates to real estate. Really, in summary, and you should do your own assessment just to make sure that you fully understand your obligations, but the first point here is about working as a buyer or a seller's agent in relation to real estate. The second point here, in simpler terms, is you're a property developer or other business selling house and land packages, apartments off the plan, and blocks of land in new subdivisions. So if you're doing any of those sorts of activities in relation to the buying and selling of property, you may well be providing a designated service. And if you are providing a designated service, it doesn't matter how many you do. If you do one, you must have an anti-money laundering program and controls in place based on your organisation to comply with it. So it's really critical for all of the businesses, I think, and members of the MBA to consider whether or not you are providing a designated service. And we'll cover off on this more a bit later on as well. But really, when it comes to anti-money laundering, a lot of what you do is about documenting your decision and the artifacts. So even if you don't think that you do these and you think, well, we have a real estate agent that does this all on our behalf or something like that, then you should be very, very clear about documenting that decision and making the appropriate artifacts within your own governance arrangements within your organisation to make sure that you've done the appropriate due diligence to make sure that you've made that decision appropriately. So I'd strongly recommend everyone have a look at whether or not you think you provide a designated service and document it, yes or no. If the answer is yes, then you need to document that, but then also have an anti-money laundering program in your organisation. And we'll run through now what that entails. there are lots of obligations and there are lots of nooks and crannies. This is a very complicated piece of legislation, and then you have rules, and then you have guidance, and then you have your own risk appetite and your own controls in place. So I've built this simplified pictorial demonstration to help my discussions with businesses around how they comply with the Anti-Money Laundering Act. And where I would start with this is in the middle. The first thing you need to do in relation to once you've worked out that you've got a designated service is really in the middle, in the top left here, the internal policies, procedures and risk assessments. You need to start off with a risk assessment of your own business in relation to the risks that you see as a result of money laundering. And the definition of money laundering, and we'll go through this still in a bit more detail later on, really has several aspects to it. It's about money laundering, it's around counter-terrorism financing, and it's about proliferation financing. And those are the real three key things, and you can sort of add in anti-money laundering, things around serious crime and whatever, but it's really about the laundering of those assets and your risk assessment. So you've got to start off with a risk assessment. Once you've got the risk assessment, your program and your organisational governance needs to address a number of things and controls to manage the risks that you have. And where that really starts is who's accountable. And so if we talk about organisational governance first, there are requirements under the Act for every reporting entity to appoint an AML compliance officer, a senior manager, and to have a governing body in place to oversee the anti-money laundering program. Now, some of the legislative changes that are coming in for pubs and clubs and banks and financial institutions are around some of these governance concepts, but for property developers and real estate agents, this is all new. So you've got to just be a little bit careful that you're looking at the right piece of legislation, the one coming in, not the one that's been in place, and really understand what your individuals who form part of your entity, what their roles and responsibilities are. Once you've identified those key personnel, you've got to have training in place for all of your staff / all of your relevant staff who provide designated services, and you need to do appropriate training for people like your compliance officer and your senior manager and your board, or however you decide, and depending on your scale, you're governed. Employee due diligence is something that's required. You need to have a policy and a position on how you evaluate different types of employees in your organisation. Perhaps your sales team are different to people who actually build. That might be different again to senior management, and you've got to have appropriate due diligence in place for staff. If we go in a bit further again, I talked about risk assessments. Really, the Anti-Money Laundering Act wants you to have policies and controls and processes in place to mitigate the risks of money laundering. So that will include things like how you assess your customer base. Are you dealing with high-risk industries? Are you dealing with large amounts of cash? Do you accept large amounts of cash in relation to the purchase of properties, or what is your risk appetite? You have to have very detailed processes and procedures around the onboarding process and identification of all of the entities that you deal with. And that starts with the people who you're dealing with, who are signatories or the retail sort of mum and dad buyer that you might be dealing with, or you need to be identifying the company or the family trust or the trustee of a family trust and have processes and procedures around onboarding those entities and what you need to receive from those entities and document for your own process for identification. Some of those things you may be doing today. Some of that might overlap a bit with the current verification of identity requirements for settlements with land titles. My understanding is that's often relating to the individuals. The Anti-Money Laundering Act has a very heavy focus on the legal entity, the non-individual, the beneficial owners of that non-individual, which could be anyone who owns 25% of the company or partners in a partnership, and a broader range of things to verification of identity. So there's a lot going on there in the onboarding process, and I'm sure everyone knows what it's like to deal with their bank and how hard it is when you have a non-individual entity doing something or operating bank accounts. So there will be similar things coming into effect for your engagement with your lawyers if the lawyer is offering a designated service, and similarly accountants. And of course, we're talking about what applies to you as a property developer or a real estate agent. So that's about policies and procedures. Unfortunately, or that's not where it finishes. We also need to have processes in place to monitor suspicious activity in the organisation. So you need to be looking regularly at the transactions that are going through your designated services and understanding what you're seeing there and your own risk appetite around that. That extends as well to the parties that you're dealing with and enhanced customer due diligence if you're dealing with higher risk parties, and that could be people who are typically politically exposed, government entities sort of fall into that category, and sort of foreign entity types. So there's a bit of there's certainly a requirement for you to have a risk appetite view around what sorts of entities you're willing to deal with and how you're going to be engaging with them and what behaviour you think is unusual and in turn suspicious. And if you do see things that are suspicious, there are a range of other requirements around reporting that to the regulator and then making sure that the information you have is up to date and current. So those are all of the things every reporting entity really needs to do. From a due diligence perspective on that there are also requirements around having internal reviews on your anti-money laundering program. There are requirements to have independent external audits. The new rules around that are for low-rated reporting entities within every 3 years. There's a requirement for an independent review. The requirements for an independent review are around the entity being appropriately skilled to do it. So even picking an independent reviewer is not a simple task for a reporting entity, but that independent reviewer cannot have had anything to do with your anti-money laundering program at all. If you're not a low-risk entity, the requirements are more regular. So you need to have a policy position on that and a good understanding. On top of all that, AUSTRAC, the regulator, sort of at any time can come and ask you questions or kick the tires or do a regulatory review, and you've got to be ready for that. So that is really a high level view of an anti-money laundering program in a general sense. There is a lot more detail on every point, but I think that gives you the general overview. I've got the next slide here, and maybe if we just go through this again in a bit of a circle, and I'll highlight a number of the extra challenges and complications that might want to be in the back of your mind. So if we start with governance, again, we spoke a bit about the governing body. One of the really critical points in this is around the compliance officer, and the compliance officer that you appoint now under the law needs to be a fit and proper person. And there are very specific, very specific requirements around what that looks like. Things like criminal records, things like being a discharged bankrupt, all need to be assessed, considered, that the person's got a good reputation, and there's a considerable list. In many respects, whoever it is, once the assessment's done, you can put other controls in and other training in place to make sure that you can sign off on as a governing body, that party and the senior manager must also sign that off, is appropriately skilled. But it's, just sort of mentioning, it's not as easy as just appointing a compliance officer. Record keeping under the Anti-Money Laundering Act is required for 7 years. That's really stringent and black and white. Many businesses in this space as well might currently have an exemption or a carve out under the Privacy Act, not to have to comply with the Privacy Act because of the size of your organisation. Being a reporting entity cuts straight through that. So if you think you are a reporting entity, I'd also be visiting very carefully your requirements under the Privacy Act, and whether or not you need to do any additional activities in that space. If we go to risk assessments, I mentioned before about money laundering, terrorism financing, and proliferation financing. The risk assessment process for AUSTRAC is fairly well prescribed. There's a lot of good guidance out there, but it does really, it is really based on the risks of your organisation and the size and scale. The review needs to look at the products that you offer and what you think your designated services are, the way you offer them. So saying that you have meetings face-to-face or do onboarding face-to-face rather than digital channels, and that you deal in Australia or offshore are really critical things to really understand. And then there's all of the concepts around who your customer is and what you know about them in an upfront sense, and what you learn about them in the behaviour of their engagement as a customer with you is all critical. We covered off a bit on the know your customer and customer due diligence. You have to be really clear that you're identifying all of the entities and parts of the organisation that we need to identify, but also that you are then verifying that information against independent and reliable sources is really critical, and as well as dealing with anyone who's dealing on behalf of or an authorised party. When it comes to monitoring and reporting, one of the complicated aspects is identifying whether or not a party is politically exposed. There's often a discussion around whether or not you need to be screening your customer base. It's a decision you need to make, but the laws and requirements are quite clear about it being considered and appropriate measures in place. If you're not going to do screening like that, which I understand for very small organisations is is a very significant effort. You need to be very clear about what you're doing. There are software providers out there that will help you, and you can look at those. And I encourage people to look at as many different options that are out there. There are many. But any outsourcing arrangement that your organisation goes into, and any activities like that, even procuring a screening capability, you need to have controls in place in your program to make sure that the entity you're dealing with is appropriate, and that you have robust controls in place in any outsourcing arrangement. So that's a nutshell of monitoring. Before you do a suspicious matter report or any sort of regulatory reporting like large cash transactions, you need to have a really good understanding of the entity that you're dealing with. And that requires you to perhaps do something called enhanced customer due diligence, which means considering firstly what that is for the scale and size of your organisation, but then perhaps things like open media sources and looking at what other information that you can find about the party, or potentially asking them questions about what's going on with the source of wealth and source of funds of the activity and the behaviour that you're seeing. So again, all of that needs to be well documented, well recorded, good records kept, and if you're doing all those things, your guess is potentially in good stead. So if we go through now the risk of non-compliance, often we start the discussion there with AUSTRAC being the regulator and an infringement being very costly. But AUSTRAC's also being quite clear that that's the risk of being non-compliant. The real risk is that you've done harm to society and that your organisation, due to a lack of awareness or controls, has been exploited by organised crime and something has occurred. So that's really the first risk to your organisation. The second one is that law enforcement is aware of other activities and is doing something about the criminal activity, and they can see that you haven't taken the appropriate, put the appropriate controls in place and gone to the appropriate effort to prevent money laundering, and then AUSTRAC will be looking at you very diligently, and if they have a finding against you, then they have a range of enforcement capabilities, and they range from infringement notices, as I've got on the list here, to enforceable undertakings, to remedial directions, as well as civil penalties. Some of the biggest civil penalties in Australian corporate history have come off the back of AUSTRAC's civil penalties. Some of you may remember from the media the major banks. The biggest fine in Australian corporate history is $1.3 billion against Westpac. CBA had a fine in the order of 850 million. So AUSTRAC has some pretty big teeth and is being seen as using them. So again, the key point here is there is a regulator, and you must be cautious of that, but really they will only take really action in circumstances where there's some other harm that's occurred. So on top of that, if you are in the media because of some harm in society or an infringement of some sort, there'll be adverse media. These things are well covered by the media, and that could also result, as I'm sure all business owners appreciate, in your own client trust loss and difficulty retaining talent internally. So something that will be new is, or maybe not new in relation to the engagement with you and your bank, but will be newer, is as a reporting entity, you are now covered by the Anti-Money Laundering Act. So there is a network effect that's going to occur starting in March around new reporting entities doing additional things, and the legislation requiring all of those entities to be risk assessing their customers. And the introduction of this legislation brings obligations onto property developers and these tranche 2 entities. And so banks will be looking at your anti-money laundering program potentially to make sure that you've got appropriate controls in place and that you're not a weakness in their anti-money laundering infrastructure. And that will be the case for law firms as well as accounting firms, depending on the definitions and designated services that are being offered. But it's really important to understand other parties will be asking you for your anti-money laundering program, and you might have to ask them for their anti-money laundering program to make sure that your risks are considered in dealing with them. So there's going to be a bit of this network effect going on to enforce compliance within the industry on top of AUSTRAC doing its job. So again, timeframes there, not really clear. Every organisation will deal with things differently, but heads up, it's something you should be aware of, and it's something as well that you should be understanding that when your accountant or your law firm, depending on what they're doing for you, asks you for additional information and identification, these are parts of the reasons why. So if we talk just briefly about the property industry, there are industry starter packs that AUSTRAC have put out. They are very helpful. There is a lot of information in there, but they are really worth reviewing carefully. The guidance, though, for property developers is that the real estate starter pack that has been published is not appropriate for you directly. And I'm trying to choose my language here carefully. So is AUSTRAC. So it is necessary for any property developer to look at the packs that are out there and consider the appropriateness of the risks identified. And really, I think the method is to customize that to yourself as guidance. Some of the peak bodies are also looking to do further guidance around what that means specifically for property developers, because the packs that are out are for real estate agents, law firms, and accounting firms. So that's where the starter packs are out. Any program that you have needs to have good regard to your size and complexity. If you're doing a handful of or 10 property transactions a year, your program will look very different to an entity that does thousands. The minimum or the standard obligations are really the same, but the way you apply them is different. In this industry, again, with my experience as well, I'd be very careful about the organisational structure that you have in your entity. And if you have multiple entities and special purpose vehicles and maybe a trust or a different sales entity, or maybe even an internal team that does your governance and legal, you need to be really careful about which entities are providing whatever designated service you're saying, and that you're not providing designated services within somehow. So something that maybe isn't the same for other organisations, that I'd just be very, very careful about. There is a lot of talk in the industry as well about reliance frameworks. And what that means is, say, as an example, and this is the key example, you deal regularly with a conveyancing firm. They need to be undertaking an anti-money laundering program as well. And there are avenues under the Act for you to be able to rely on some of the onboarding processes and activities that are occurring. But it's not quite as simple as that, of course. So it's really important to do, and there are requirements around doing a risk assessment on the entity that you're seeking to rely on. And even then, doing an upfront evaluation about the transaction that you're actually dealing with as to whether or not it's appropriate. So there may well be some reliance frameworks that come out, and some organisations may well be offering it, or it should be something that you are discussing sooner rather than later with your solicitor and conveyancers. But it is, I would suggest, not a silver bullet that you can use to not have an anti-money laundering program that's robust enough for the size and complexity of your organisation. So that's just a bit of a nutshell of items for builders and developers to sort of think about. I mentioned before, and just circling back on a couple of things from here. So from a tranche to entity perspective, you can enrol from the 31st of March. Just helpful, just the way it falls this year. Easter is right at the beginning of April. So just be aware of that. And then, of course, towards the end of April, you've got Anzac Day. So yes, things open at the beginning of March, but I'd look to not leave it until close to the beginning of July. The AML program that you have to have in place must be in place by the 1st of July 2026. So that's really the deadline for your obligations to commence. AUSTRAC has highlighted in its regulatory priorities for 2025-26 that they will be focusing on tranche 2 entities that have not enrolled after the July deadline. And they will be specifically looking at entities that have not put meaningful effort into implementing their AML CTF programs, systems and controls. So that will be something that they're looking at very closely, and they're flagging it. And AUSTRAC has a very strong track record for flagging in their regulatory guidance what they're going to do and then following through on it. And as someone who's been in the industry for 12 or so years, we've seen it time and time again. So they will do that. I'm very confident. So practical readiness things for organisations. As soon as possible, I'd be working out whether or not you think you have a designated service, what you did over the past year from a risk perspective, and how your organisation is structured. If the answer to any of that is yes, I'd be appointing really quickly a senior manager, compliance manager, and talking to your governance committee, however your organisation is structured, and really thinking quickly about the appropriate skills that those people need and their training requirements. The third suggestion I'd make is around reviewing and risk assessing your systems, processes, and identifying any capability gaps in your sales process, risk governance, onboarding, training. AUSTRAC has heaps and heaps and keeps on putting out more and more information, everything from webinars to guidance packs to well, we talked about the starter packs. There's a lot of material out there to go through. Signing up to the AUSTRAC updates is just a really simple thing to start with, and reviewing the starter pack. I mentioned before a bit about the network effect. I'd start sooner rather than later talking to your bank, your lawyers, accountants, and making sure that you understand and they understand what you're doing, and your approach, and they might also be able to help you. So like it should be a collaborative industry effort. We're all here trying to do the same thing. And then I'd be looking pretty quickly at what your budget is for anti-money laundering and financial crime, and documenting all your decisions. So I know that's a lot of information that I've just downloaded. The slides, of course, will be available. Happy to open it up to any questions. I'm also happy to come and visit any businesses that would like some extra help. I'm a Canberran in the local community. I'm eager to help businesses across the ACT region comply with the Anti-Money Laundering Act, however that is. I'm here to help. And I might just pause there and let it sink in.
No problems. Thank you kindly for that, Tim. As Tim just covered there for the last few minutes, I'll go a few minutes about some of the very significant things that are coming down that's going to affect us in the ACT. I've just got a couple of points I'm just going to ask Tim to clarify or to reinforce to go with it from there. The first part is that you put on the last slide is your practical exposure, just to go with it. What is your first suggestion? Somebody who's just hearing about this or understanding it from here, is it jump on the AUSTRAC side, or is there somebody else or something other place you should go first up to get an understanding of what is a designated service?
So it's really, it is, well, if you're in the property industry, the really clear thing is that third slide 5, sorry, which is about those two things. If you are buying and selling, or if you are selling property directly, that's what you need to be considering. Again, it depends on what you are doing. That should either be fairly clear to you, or you're of the view that you have outsourced that, or it's the view that you don't do that because you have a real estate agent doing it for you or something like that. And if that's the case, again, I'd be documenting that really quickly, but still having that discussion either with a AML consultant like myself, and happy to chat through with anyone. But making sure that your lawyer is clear about that, and probably your bank, to make sure that they see you in that light, and that you've told them that that's what you're doing. So if that's the case, if the answer is yes, you do those things, then you need to be thinking about how you're going to build a program.
And jumping on the AUSTRAC straight away to have a look at some of the starter packs to go with it. Thanks, Tim, on that side. It was the biggest one that I was looking at. It's a shock, going to be a shock for a lot of people who have never been exposed to it.
Yeah.
And it's more about not holding the hand, but giving them guidance on where they need to go to make those decisions and what they have to put into place.
Yeah. The first key thing probably there is understanding the entity that you're dealing with and what your current risk governance approach is, and that those people who are accountable for that current risk governance are aware that these regulatory obligations are out there, and really doing whatever your standard process would be to assess whether or not you need to comply with a new law is probably where you need to really start. But again, those people should be well placed to understand the risk appetite of your organisation and where to take it from there.
And that took me to my second part. The question to go with it is, there's no difference between what size businesses. If you're a single person operating or a large multinational, you've still got the same obligations under this new lot of rules.
Effectively, the obligations are the obligations, and your response can be relative to the risk and the scale and the appropriateness of the controls that you see. So you sort of still need to do the same things. You know, whether or not you're of the view that you might not do this control, but you might do that control based on the size of your organisation and how familiar and close you are to the transactions and how much visibility you have are also big considerations. I think what I'm also seeing around the industry as well, and certainly it's the case in the pubs and club space, that when a club group is big, those controls are not clear to the management the same way they are if you're a small operator. And if you're the compliance manager and the senior manager, because you're a really small organisation, and that's okay, you will have a very good feeling for exactly what's happening in your organisation. And that is really good for you to be able to set your own risk appetite. Again, if you see things that make you uncomfortable, then that's probably what they should be doing, and you should then be taking that feedback and that feeling and doing more and understanding how your organisation is operating is something that smaller operators will be very familiar with.
No problems. Thank you very kindly, Tim. I was just going to turn to if there's anybody online who's got a question for Tim at the moment, but do remember, from Master Builders, we will be putting this available to all the members and attendants on those sites, and we'll be putting a few note points to go behind what Tim's been talking about here to help you in your guidance process of whether you are a designated service and what you should be doing from there. So if you've got a question, just jump up and put your hand up and talk out now. If not, that's okay too at the same time.
Yeah, hi Scott, Jack Mason here. Just a question about designated services. So just on the website too, it's pretty clear. But if you've got an SPV, would that SPV need to be registered even if you've employed a real estate agent to take the sale of the property on your behalf?
Well, yeah, without being perfectly specific, like still need to look precisely, but my view would be, if you are never selling your properties directly yourself and you are then engaging a real estate agent to do that on your behalf, then that is okay, and you should document that decision and say that you, as a control, will never sell a property directly through that SPV entity. Does that answer your question or not really?
Okay. Yes, it does. Yeah, thank you. Very good.
Yeah. No, thanks for that one. Anybody else to go with it from there? But do remember, Tim is available. He is what I class as my expert to go to on this type of topic. And if I've got a question, I'll bail him up and ask it straight down the line.
Happy.
Same should apply to the members. If you've got a question, come to us and we can take Tim or put you in touch with each other to work through your particular circumstances on what's going on.
Yep. Happy to help.
Right. Well, if I'm looking at that, I'm not seeing anybody else jumping in greatly. I would like, firstly, from Master Builders AUST, I'd like to thank Tim for coming along and presenting on this topic and the impact it's going to have overall. I'm going to talk to Tim after this on a couple of ideas, what I'm thinking. But the more part is welcome to thank you for coming along, putting the idea forward and being available to help our members through the series on this side. Just to follow on from that, this is this series. The next one we've got is on the Suburban Land Agency. It's an in-person one. That's next week, I'm believing on that. And we can come along. But other than that, I'd like to thank you and let's just have all a good afternoon from there. Thanks for that.
Thanks all.